If you're thinking about renting your car on Turo, one of the main things you need to understand is your options when it comes to insurance coverages. This is one of those things that can literally make or break your business. So in this video, we're going to cover everything you need to know about how to insure your vehicles on Turo for maximum protection. So one of the first things you need to know is that Turo's insurance only covers the cars during a trip. So that means you're going to need your own policy for when you purchase the vehicle, when you're driving it yourself, and for when it's parked. Now, if you buy a car in your personal name, insurance is pretty straightforward and you can get a personal policy. But my recommendation is to buy all your rental cars in your business name. Now, when you do this, you're getting a bunch of different benefits, but one of the main ones that we're going to focus on today is the ability to get commercial car insurance. And even more specifically, you can get commercial car sharing insurance, right? Now, this is literally made for people like us who are out there renting their cars and making money on these different platforms. Now, how these car sharing policies work is they actually cover the vehicle whenever it's not rented, right? So Turo takes care of the vehicle's insurance while it's actually rented on a trip, and your commercial car sharing policy is going to cover the vehicles at times when it's parked in between trips or when you're driving the vehicle yourself. Now, one of the great things about this benefit is because of the fact that these cars are usually going to be rented and the policy is only covering it on the times that it's not rented, is you can get these policies for extremely cheap. Most of my commercial car sharing policies cost me about $50 to $60 a month per vehicle. So now let's talk about the insurance options that Turo will actually give you while your vehicle is on the platform. So while your car is rented, you'll have 5 different options to choose from when it comes to insurance coverages. Now, the amount of coverage that you're receiving is going to be dependent on a profit split that you agree to with Turo. So, for example, Turo has a 60 plan. This is their highest level of coverage. This is you receiving 60% of the revenue and Turo receiving 40% of that revenue. On the flip side, they also have a 90 plan, right? This is the least amount of coverage, but you're going to be receiving 90% of your revenue while Turo only receives 10. Now, the main difference between all these insurance policies is going to be your deductible. Your deductible is the amount of money that you have to come out of pocket before the insurance coverages starts to pay for the repairs. Now, to keep your liability as low as possible, the only 2 plans that I recommend are going to be the 60 plan, which has a $0 deductible, and the 75 plan, which has a $250 deductible. So first up, let's talk about the 60 plan. Now, this is going to be the plan that provides you with the most coverage possible because Turo is taking that hefty 40% out of all your trip earnings, right? But if anything happens during that trip and you have to file a claim, you have a $0 deductible, which means they are going to pay for your repairs 100%. The other thing I really like about this plan is that they cover normal wear and tear. Now, Turo considers normal wear and tear to be any dings, dents, or scratches that are less than 3 inches, right? In any of the other plans, you're not going to get reimbursed for these everyday wear and tear items. But on the 60 plan, even the smallest of scratches can get reimbursed if you choose to file a claim for that. The 60 plan also offers a loss of hosting income reimbursement program, which essentially means that if your car goes down and has a claim and it's in the shop getting repaired, you can actually get reimbursed some of the income that the car would have made if it didn't go down for the repair, right? It's an awesome way to be able to boost your earnings in those times of the vehicle's down and it's not making you any money. Now, if you're making your decisions strictly based off of that loss of hosting income reimbursement, let's actually go through the fine print because it's not exactly what it seems. So this is how Turo explains their calculation for loss of hosting income reimbursement. So what they actually do is they look at your previous 60 days of rentals and they will average out how much you made per day. Then they're going to multiply that by the amount of days that it's going to take your car to get fixed, and that comes based off of the estimate itself. Now, it's super important to be aware that this calculation that they have can come out lower than what you may be expecting if you have days where your car is not rented during that 60-day look back period, because those days that it's not rented literally counts as a 0 for the average. The other thing to be aware of is if you don't have 60 days of data to look back on, what they'll actually do is just take a flat $25 payout, and that is what you'll get for loss of income. So just be aware of that when it comes to actually expecting to get that loss of income money from Turo. So now let's jump into the 75 plan and a couple hacks that you can use to make sure that you're always getting the maximum amount of coverage if you ever have to file a claim on Turo. But first, if you're getting some value from this video, make sure that you hit that like button, subscribe to the channel, and leave a comment. Let me know which insurance policy are you going to be using in your Turo business. All right, so let's jump into the 75 plan. Now with this plan, you're only going to be giving Turo 25% of your income, but you're going to have that $250 deductible, which just means if anything happens and you have to file a claim, you do have to come out of pocket $250 before they start to cover any of the repairs. Now, this is still a great option because of the fact that it's still a way to limit your out-of-pocket expenses. Now, if you're running your business, it's super important that you are saving your reserves as you go, as you make money. So that way, if you are on that 75 plan, you're not breaking the bank to pay them that $250, and you're not holding up the process of getting your vehicle fixed. Now, as well as having a $250 deductible, another thing you want to remember is you're not going to have that wear and tear coverage like you do on the 60 plan. So that means those small nicks, those small dents, those small scratches that are less than 3 inches, they're not going to be reimbursed. Now that brings us to our last point, which is which one of these policies should you use for your Turo business? Now, ultimately, this decision is going to be up to you, but let's go through some rules of thumb that have helped me in my journey, and I think that they'll be valuable for you as well. So I use a little bit of both, right? I use the 75 plan for all of my economy vehicles, but then I use the 60 plan for my luxury vehicle, which is a 2022 Tesla Model Y. Now, the reason why I use the 75 plan for all of my economy vehicles is because I'm usually buying them 2 to 3 years old already. They're already gonna have some scrapes, some dents, some scratches in them, nothing too crazy, right? So I know I don't have to worry about getting that wear and tear reimbursement that I'm not gonna get with the 75 plan with these vehicles. But I also know, should anything big happen, should any accidents happen, should any damage more than 3 inches happen, I only have a $250 deductible for these vehicles. Now, I keep my Tesla Model Y on the 60 plan because those small dents, those small scratches, anything small like that, I want to keep that vehicle in pristine condition. So I'm okay sacrificing some of the cash flow to be able to cover myself on the back end if anything small does happen, that I will be fully reimbursed. Now, one of the most common literally one of the most common things that happens with my Tesla is damage to the rims, right? Specifically, something called curb rash. Now, curb rash is when they're pulling up too close and they hit the curb and they scrape up the rim. Now, this repair usually costs me about $100 to $150 to get fixed, and it can happen on like 60 to 70% of trips on Turo. Now, because this is something that happens so often, if I was on the 75 plan, every time it happened, I would have to come out of pocket because it doesn't meet that $250 minimum for the deductible. However, by being on the 60 plan, every single time this happens on my trips, I'm always getting reimbursed the full amount to go and get my rims fixed and put the vehicle back in like new condition. So really just analyze the condition of your vehicle, the condition that you need to keep that vehicle in, and ultimately how much protection you want to have on your vehicles. And just know that you can choose an insurance plan per vehicle. It doesn't have to be one size fits all for your fleet, but you can switch it up the same way that I do in my fleet. Now, the last tip about protecting your cars and getting the payouts that you deserve and the maximum reimbursements is going to happen before you even start the trip. And that's going to be your photos, your pre-trip photos. Now, Turo is going to suggest that you take like 10 to 12 pictures pre-trip to document the condition of your vehicle. But I'm here to tell y'all, look, you need to take at least 40, preferably 50, and to be safe, 60, right? 60 of these photos to document the condition from all different angles of your vehicle. Taking the time to do this on the front end of any of your trips is going to help you should you ever have to file a claim. You're going to have the documentation you need to make sure that you secure the maximum amount of coverage for your vehicle. So if you guys got some value out of this video, be sure to hit that like button, subscribe to the channel, and let me know which one of these policies are you going to be using in your fleet. Feel free to also drop any questions that you have so that I can make sure that I answer them in some future videos. Let's get it.